Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Russell Rhoads, Director of Research at EQDerivatives, for an update on volatility. And Russell, of course, it's appropriate as we're going into traditional options expiration this Friday. Any trends you're seeing out there?
The one trend, and it matches up, and you like when you see things match up between the volatility indexes and what's going on in the underlying market. But you're seeing that VolQ remains at somewhat of a premium relative to VIX. And I think this is reflecting continued concerns with respect to tech stocks. Also, just, that they have underperformed a little bit this year as of yesterday. I think the NDX was up about 3% and the S&P 500 was up around 6%, which, if you put it on the heels of 2020 when the NDX outperformed so much, it shouldn't be taken as much of a big deal. But it looks like if you focus in on VolQ and look at that relationship to other broad-based volatility indexes, you do want to be cautious with respect to tech stocks, at least over the next few months.
Yeah, and I mean, it kind of makes sense. The other narrative to that, if you want to think about it from a fundamental perspective, is, of course, the 10-year, right? And that seems to be what everyone's talking about. As interest rates go up, that could potentially impact growth stocks, particularly within the tech sector. So, not too much of a surprise to see a little bit of a rotation, considering the year that the Nasdaq 100 had in 2020, to your point.
Yeah, and you didn't see the VolQ really follow VIX's lead earlier this week, as VIX actually dipped under 20, which is a site. It doesn't mean that much, but it's a nice psychological number that a lot of people like to focus in on. And you did not see other broad-based indexes really follow VIX lower, and subsequently, actually, VIX has rebounded back up, probably reacting more to the upside than you would normally expect, with the S&P 500 not selling off that much. So, and also when you start to look at some of the derivatives that are based on volatility, even though volatility indexes are trending down a little bit, they just do not tell us that we're out of the woods quite yet.
And Russell, does this have anything to do with the way VolQ is constructed relative to VIX, or is that really nuanced and those moves wouldn't show up in the way it's calculated?
Well, the way that VolQ is constructed relative to VIX, it does create some differences. And just to add on to that a little bit, VolQ really is more of an at-the-money measure. It is looking out 30 days, but VIX uses a whole strip of options, which will take out-of-the-money calls that don't really do that much as far as changing volatility, and out-of-the-money puts, way out-of-the-money puts, which can have very wild swings. Whereas VolQ is an at-the-money measure. VolQ also does a better job of predicting what the subsequent realized volatility is going to be. And because of that part right there, and typically subsequent realized volatility is downside volatility, because of that aspect of VolQ relative to VIX, that's why I really take it as a cautious signal, and not just for tech stocks, but really for the overall equity market, because tech stocks are high beta stocks, and those are the ones that you would expect to come under extra weakness if we do get some sort of sell-off in the overall equity market.
All right, and to wrap up here, I understand we have an event coming up this week.
We do. My team and your team are teaming up together tomorrow. We're doing a virtual forum at 11 o'clock Eastern time. You can go to EQDerivatives.com to find out more about it. Basically, the title is Evaluating ETF Strategies, a Guide to Enhancing Yield and Growth. And we're partnered with Nasdaq on that. Ewan Sinclair from the Hull Tactical Asset Allocation Fund, who I am a big fan of and just put out a really good book recently, is going to be participating in that. We've got 3 people from Nasdaq, Rick Tomney from Little Harbor Advisors, and Harley Bassman from Simplify as well. But what they're really going to be looking at is, if they're going to kind of bifurcate things. We're going to look at what kind of ETFs do you need to be looking at into 2021 if you're really concerned with yield or enhancing yield. And if you do think that there's going to be a resumption of growth for growth stocks, we're going to evaluate some ETFs that would benefit from that as well.
All right, sounds like a robust agenda. Russell, as always, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.